The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 18th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got quite a rally going on out here. You got the Dow that's up 475 points, about 1%, 1 4/10 for the S&P or 93 points, 2% for the NASDAQ 100, 497 points there, 1 4/10 for the Russell. That's a 35-point move, 289 for the transports, 207 for the semis, 436 for the NASDAQ Composite, 186 for the New York Stock Exchange. Gold is up $3, with silver being back $1. Lights recruit up 50 cents. Natural gas is up a nickel. Let's start by taking a look at the advanced decline line, the advanced decline oscillator, as well as the spot VIX index. Let's go see what position both of those are in. Where do we got it? Here we go. So left-hand side, bottom panel, market breadth is enough to push that thing back above zero. We have been below the zero level for 2 consecutive days. So right now, it's kind of neutral to sellers still have control. In order to prove itself, we've got to get 2 days up above that zero threshold level. Spot VIX index, on the other hand, that is in full possession of the buyers. Yesterday, price got up to its 50-day exponential moving average. Currently today, printed at 1768. It tested it. It rejected it. We're trading lower today. That is good news for the bulls out there. Let's go ahead and close this down. Let's go take a look at the daily equity future contracts. Populate those. We'll see the ES mini momentarily, the Dow, the NQ. Come on. Here we go. So now we take a look at these. The one thing I noticed, at least at this moment in time, as of 11:09, we still have a series of lower highs, a complete series of lower highs. And the ES mini, ever since the top that formed out there, really the same pattern is in place. If we take a look at the NQ, we've got that same pattern in place for the Dow equity future contract, and the same thing for the Russell 2000. Now, we have traded lower for 4 consecutive sessions for the ES, for the YM, and for the Russell 2000. To get a 2-day rally would be normal, at least you would think, out here. But if we don't take out the prior day's highs, kind of says, Now, the one chart here that's a little bit more bullish than the other 3 would be the Dow equity future contract. In fact, quite a bit more bullish. The reason being, number one, we are trading above its green oscillator and change line. I do not know if we will close above it today. It's currently printed at 48,586. We're trading above profile resistance. That's way down at 47,508. So its conditions are bullish. That means its overall chart pattern for its daily time frame is somewhat neutral. If we move from here and go take a look at the daily cash indices out here, let's go see if anything is trading above yesterday's high. So you've got the Dow on the upper left. Populate here momentarily. The answer there is no. What's needed to do that? What's needed to do that is a close above. So as this populates, I'll be able to get that for you. It would be a close above 48, 387.33. The S&P 500 right now is testing or taking on that high at 68.12.26. We're at 68.12.66. If we can close above that, that would then signal we ought to make its way up to a price that is. It's way up to its oscillator and change line at 68.35. And that could be indicating, okay, we've got at least a 2-day rally. And I have to say at least, because when we go take the seasonal patterns, this is what we've got to try to figure out here. If we look at the NDX 100, we haven't taken out yesterday's high, nor so on the Russell 2000, nor on the semis. The transport's a whole different animal out there. Transports are going after their swing point from back on December 12th, a close above 17,734.21, and we'll have a new all-time high close for sure. The NASDAQ Composite would need a close above yesterday's high, which is at 23,159.20, and the New York Stock Exchange, although it's tested yesterday's high, trading just below it right now, it being 21,935. I'm sorry, didn't get the pennies out there. 21,935.96 out there. So those would be levels that I would be watching. If we close above yesterday's high, in a handful of these indices out here, I would then say and suggest that, okay, we should at least get a second-day rally. Now, I just said we should at least get a second-day rally. Why is that only a second-day rally there, Stevie? Good question. Let me try to answer it this way. And by this way, I mean I'm going to go ahead and pull over the seasonal charts here. And the seasonal charts we're pulling over for the Dow. So I typically look at the S&P 500. We've got more data for the Dow. We've got, in fact, 128 years worth of data. So we've got 127 events of Christmas out here. And that's what we're looking at right now. So this shows us over the seasonal average 10 days before and 10 days after Christmas. We are now, by my count, 5 days. We're on the 5-day count right before Christmas from a trading session standpoint. So that would be putting us about right here where my cursor's at. Now, over that 6-year or 128-year, I'm sorry, over 128-year history, 127-year history, this suggests that we should start inching our way higher with a rally leading into the end of the year. Now, that's over the last 128 years out there. We can back this down to 25 years, see what its seasonal patterns are. Here, we can see that from day 5 through Christmas, we typically rally. Then we rally for a couple more days, and then we kind of slosh around, almost up until the end of the year. That's over a 25-year period. The last 15 years shows us really a similar pattern. On day 5, we start to rally further. We take a look at the last 10 years out here. Again, this is for the Dow that we're taking a look at. Starting with day 5, we kind of move lower, and then it's really a sideways move before we start to get a rally. So all this is saying, hey, there's a possibility. From a seasonal standpoint, I can just share with you, seasonally speaking, you can see exactly where we're at. If we take a look at, we can actually look at the entire month of December here. And so now we're not looking at the 10-day period. We're looking at the entire month. We can go back 128 years. And the month we've got to select is the month of December. So that's what the actual seasonal pattern typically looks like for the month of December. Looks like we typically rally into about the 9th. Then we start pulling back into about the 17th, 18th. Here's where we're at right now in the 18th out there. And then it really starts getting going and cooking right around the 20th and 21st. That's a seasonal pattern over 128 years for the month of December for the Dow Jones Industrials. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's get to our first request out here. The first request is to take a look at Tesla. This is from S&P inside the Tiger's Den. Tesla, first on a monthly time frame, you can see the nice A to B equals CD pattern to the upside. The initial price projection on this is about the 505 level out there. If we look at that monthly time frame, there's no topping signal at all that I see out here. So the monthly time frame is saying that this should rally further. If we look at the weekly time frame, the weekly time frame will negate a TD9 count and Rhodes Momentum Indicator top, with a close this week above 474.07 out there. The TD9 count top gets negated at 470.75 out there. So right now, both those patterns appear to be being negated. It would need a bearish reversal candle to confirm a Rhodes Momentum Indicator top. So the weekly and the monthly out here, S&P say I want higher price. The daily. The daily is really saying the same thing. And it's saying the same thing because price is trading above its green oscillator and change line, and it's trading above the top of its profile at 442.08 and 465.15 out there. So we also have an A to B equals CD pattern on the daily time frame. The B point, which was also a TD9 count top, was December the 5th. Volume there was 56 million shares. It was taken out with 95 million shares out there. So Tesla on a daily time frame has a confirmed A to B. We just draw that in there. That C point out here is, I'm just simply going to move this over. So the gives you an initial 1-to-1 price projection right about the 509 area. So we're about 509 for an A to B equals CD. We're about 505 on the monthly time frame chart. It surely looks like to me that Tesla wants to continue to move higher out there. So I hope that helps you out, S&P, and thanks for getting things kicked off. Duncan, Steve wants to take an RDW. And the question is it forming, I believe the question is it forming an A to B equals CD pattern to the upside for its daily time frame? So let's actually just open up the daily time frame chart so that we're all just looking at the exact same thing. So if we're going to have an A to B equals CD, you'd have to be using the TD9 count bottom on a daily time frame as your A point. And that would be, this is what I see. That's November the 21st. The B point out here is a trading session from December 12th. Price running into its second TD9 count breakdown resistance level and backing off. That would be the B point. What we don't know is whether or not the trading session of December 16th is the C point of an A to B equals CD pattern to the upside out there. We won't know that because price has to close above that December 12th high out there. That's at 820. So the A to B equals CD pattern could look like this. It does not look like this at the moment, but this is the pattern that I would be drawing in there, which I'm not sure if that is what you were looking at as well. Remember, I'm kind of truly multitasking here, trying to get charts set up, make sure I even got this out of order. Usually I try to take things in order. I miss Dan's Nike. We'll get to that here in a few moments out there. But this shows you could get about $9.67 or so A to B, but you got to pass the B point. So what we're doing right now is price is testing that B point of that potential A to B equals CD pattern. That swing point has volume of 12.8 million shares. We've been trading for just under 2 hours. We're at 8 million shares. So you've got volume. That is for sure. So the first thing you need to see this thing do here, Steve-O, is close above 719. If we can't close above 719, you have to say why. Well, you don't have to say it, but I would say it. Yes, Steve, up on volume. But it's got to take that out with volume, though, because you don't have to. So on the A to B equals CD pattern, Tom Obi-Wan, as you know, was almost entirely a volume guy, right? So we know that. If you trade currencies, there's no place to get volume out there, but you can still use the A to B equals CD pattern. So you don't need necessarily, if you can pass a swing point with volume, tells you there's more buyers in the store, right? So you should be able to push price up. If you pass it with lighter volume, just says it may be more difficult. Doesn't mean that it won't happen, but you still have got to get above that A to B equals CD. You got to get above that high from December the 12th out there. So you're testing with volume. Man, if it can't get in there, why? Now, I don't know the answer to that question, obviously, but let's go take a look. That's a daily time frame. Let's look at the weekly time frame. Weekly time frame shows that we are trading above profile resistance. This could be week number 2 above the price point of 689. If we get that, Steve-O, this will generate a bullish profile change in trend. I don't have a bottom pattern, but that would be the bottom pattern, being able to close above profile resistance for 2 consecutive sessions. That would add to the theory that the daily ought to at least be able to go and take on that swing point. Maybe go ahead and form an A to B equals CD pattern on the upside. Then we get to the monthly chart. The monthly chart doesn't look so good. In fact, the monthly has a swing point. Was it taken out with volume? The swing point would have been April of 2025, 29 million shares. Last month, 118 million shares. So RDW, technically speaking, is going out of business. Why is that, Steve-O? Because if we drew in a confirmed A to B equals CD pattern to the downside, and that's what it's got, you can see it'll take us down to, I take that back. It doesn't take us down to 0. It takes us to $1.85. So the monthly longer term, Steve-O, is saying I want lower price. The weekly is saying I'd really prefer higher price. In the daily, we're just not sure just yet. So I hope that helps you out. It is the best that Steve-O on this end can do for Steve-O on that end. But we're not done, because Steve-O on that end would like to take a look at Marvell. So let's go see if Stevie on this end can, we're going to stop with the ends out there, take a look at Marvell and figure out what's going on here. So what do we know about Marvell? The first thing that we know, Steve-O, is that if price closes below the close of bar number 5, that's from December 12th. The close is 84.43. We're trading 84.21. If we close below 84, let me get that again, 84.43, you will have a TD9 count bottom pattern that confirms today, completes tomorrow. What that then says is Marvell should at least rally up towards 87.78. That's the bottom of its profile, pretty darn near close to its oscillator and change line. So that's what the daily, if we don't get if we close above that level, the count will go away. And then what does that tell us? Well, we have an inside bar. An inside bar typically says that we move in the same direction that we just came from. That would be to the downside, and that would say we start heading towards $78. So today's close is going to be muy importante in communicating to you and I what its intentions are. So again, that number is going to be 84.43. The weekly chart, it's got a wave number 7 signal. We're 2 weeks now, perhaps below its oscillating change line. It's just lost its momentum at this moment in time. It's still the daily one that I think is controlling things. Weekly on Marvell, we're just consolidating with inside its monthly profile. So that's what I've got for you there, Dunk. I think that was a more decisive. Of course, we need the laboratory experiment to tell us what it's going to do. You and I have no idea where price is going to close. But once it does, that'll provide you with a nice piece of information out there. So I do hope that helps you out with those two requests. Let's go take a look at Nike. They're out with earnings. This is for Dan inside the Tiger's Den. And I suppose the question is, well, which way is this thing going to head? And that's a great question. Now, what you do have in Nike that formed yesterday, and folks, you should, those of you that are trading Nike, you should write these numbers down on your pad of paper. 63.59, bottom of its new profile. 67.29, center of its new profile. 68.52, top of its new profile. The sell zone is between 67.29 and 68.52. So, if the market responds positively, no. And on a daily time frame chart, that's your resistance level out there. Support is down at that 63.59 level. We come back to this break. We'll finish looking at Nike and any other requests that have come in. I see one here for NEWP, so we'll get that going. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we're taking a look at stock charts here for Nike. And isn't the real question, has Nike bottomed? Now, if we were just to look at the daily and the weekly time frame chart, the answer to our question would be yes. Why is that? Well, if we take a look at the daily time frame chart, we'll see that the low came in on November 7th. That was bar number 9 of a TD9 count pattern. There's native B equals CD, by the way, that is to the upside, but there's no bearish reversal candle out here, so there's no confirmation of that top. Just price running into resistance out here at 68.61. TD9 count breakdown resistance level out there. So that's an area that price would need to close above in order to really get bullish again out here inside of Nike, and it may do that. Support again being down at 63.59 on the daily time frame. The weekly chart has a Rhodes Momentum Indicator bottom, and it's also got a TD9 count bottom. So that last move to the downside back in November 7th. And remember, on November 7th, we got the TD9 count on the daily time frame. We also got a weekly TD9 count bottom pattern. Now, in the case of the weekly time frame, we're also trading with insider profile. So the daily profile really has got resistance at 68.61. The weekly 69.97. So those are your two resistance levels right now to the upside. To the downside, you've got 63.59 and 61.50. And the reason that we really can't answer that question, has Nike bottomed, is because the monthly chart, if we were just simply long-termers and we said, what is a long-term signal? The long-term signal is that Nike wants to make its way down to 34.76 or thereabouts. Why? Because price negated a TD9 count bottom pattern, and that was a bottom pattern that formed back in October of 2022 out there. And it was negated with volume, meaning price closed below it in June of 2024. Volume there was 300 million shares versus 200 million shares. That's a confirmed A to B equals CD pattern to the downside. Price on a monthly basis is still below the bottom of its profile. So the resistance level out here is at 67.36. We're at 66.74. So it really makes the answer to that question somewhat complicated. I would answer it like this. I don't see anything in the daily or weekly that suggests that price should move lower out there. If it does move higher, what you're watching for is how does price handle basically the 69.97 level. If it can close above that, Dan, then we're off to the races to the upside. That upside would get us towards 76.97. So that's what I see with regard to Nike. I hope that helps you out. Hope that made sense with regard to the daily, weekly, and the monthly timeframes. Sat P writes in, would like to take a CRCL, looking to add a few shares or buy a few shares out here. And here's what we can say, which is not much. So this forms a TD9 count top. It does it on the trading day of December 9th. Price pulls back, closes below its oscillator, below profile support, but SAT does find support at its oscillator and change line. So that's your real support level at 75.15. So if you were to buy a few shares, if price closed below that, you would then know that price is going to likely go target 68.05. I don't necessarily see a bottom here. We're well below support on the weekly. We just don't have a lot of data out here to make a great decision on that. But we probably do for MSTR, right? MicroStrategy. We should have more data for that. So let's put that up on our screen out here. That was your second request. So I don't have a good answer for you on your first request with regard to CRCL. Let's see if we can come up with anything on MSTR. Now, this is all about Bitcoin, right? So you got to also kind of understand what's going on with Bitcoin. But just simply to look at these charts and answer your question, is there a bottom out here? The answer to your question is yes. This formed a Rhodes Momentum Indicator bottom on the daily time frame on December 1st. Volume there was 42 million shares. We've been trading inside that with 25 million, 21 million, 19 million. Today so far, another 6 million shares. About an 19 million share day, maybe, versus we're pulling back with lighter volume. So there's your daily bottom. The weekly has a TD9 count bottom. We're trading into its swing point that has 138 million shares with 71 million shares. So we're pulling back with lighter volume out here. We're below all kinds of support levels. But, and if we look at the monthly time frame chart, support for it, shoot, that's all the way down at $18.83 out there. Now, MicroStrategy closed below a swing point. It looks to me like the swing point is March of 2025. Let me just confirm that low of 231.51. Low here of 231.92. Yeah, so that's our B point. And that had volume of 429 million shares, passed with 340 million shares. So here's an A to B equals CD pattern, light volume. Dan inside the Tiger's Den says he likes to use this as a rule. And the rule that he likes to use is if you pass a B point with volume, more likely than not, you're going to do the 1-to-1. You're going to at least do the initial price objective, the 1-to-1. If you pass it without volume, you're still going to move higher or lower, depending on whether it's A to B equals CD to the upside or downside, but that you may not do the entire move. Well, the entire move here for MSTR would get you only down to 145.80, not $20 less than where we're trading right now. The monthly's been down for 5 consecutive months out here. This is going to be 6. Looks like it's going to be 6. SAT, best thing I can say, if you want to take add some shares in MSTR, just simply close out the position if you close below that hammer low, and that's at 155.61. So that's what we've got for you on CRCL and MSTR. I hope that helps you out. Thank you for your request. Rye wants to take a look at NEWP out here. Let's pull that chart up on our screen and see what that is doing. NEWP. Why didn't that come up on our screen? Oh, I know why. I hit the wrong button. There we go. So New Pacific Metals, and you want a buy point on this. So you're a chaser. So here's what I'm going to pose to you. First, let's see what the charts are telling us. The monthly time frame, as you can see, is going to go ahead and form a TD9 count topping pattern at the end of this month. Can complete that pattern next month, but it's got the potential for a top. If that's got a top, we should see a top in the daily and the weekly, or at least one of them. I do not see a top on the weekly. It needs a bearish reversal candle to confirm a Rhodes momentum indicator top. Short of that, price should move higher. There is an A to B equals CD pattern on a weekly basis. The swing point, which is October 17th, had volume of 7.5 million shares, passed with 7.7 million shares. So New P, which is New Pacific Metals Corp, has got what looks like a pretty decent-sized A to B equals CD pattern to the upside. I'm not going to be dead on balls accurate here, but I'll be pretty accurate. I'll just move that over to the C point out there. And this says that the 1-to-1 price objective here is at about the $4.06 mark out there. We can see prices along the strong side of that C to D leg. This should do more than a 1-to-1 out here. I don't see a topping pattern on the daily. I know your question, Rye, is a buy point. When we come back from this break, we're going to try to answer that question for you.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're looking for an entry point here for a ride to add some shares to any position he is in NEWP. So I've got the daily time frame chart here open for you to take a look at. And what I want you to look at, Rye, is the bottom pattern, the bottom panel. Don't worry, I got a little bit of sleep last night. If you take a look at that bottom panel, you're looking at those red digits where it shows you consecutive days to the downside. They typically run 2. On average, most of them are 2. In fact, if we go back for quite a few months out here, that's all we see. We see 1 3-bar move to the downside. Looks like today may be bar number 2. So I say you could add some shares today. Maybe you get a bar number 3, because the ideal place to add would be that oscillator and change line at 339. But I don't know that you're going to get that. Of course, you don't know either. But we do know that typically this does a 2-day moves to the downside before it resumes its move to the upside out there. So I hope that helps you out. Best of luck to you on NEWP. Greg writes in, he'd like to take a look at the OC out here. So let's go ahead and pull that up on our screen out here. See what OC is doing. OC trading out at about $117.27. And if we take a look at Owens Corning for its daily time frame, right now it's taking on profile resistance, Greg, and that is at the price point of brand new profile, just formed, 117.31. This has a buy zone. Interestingly enough, that's what it hit today, between 111.48 and 112.21 out there. Now, from an A to B equals CD standpoint, let's do this here. I don't think this was a 0.382 retracement, but I'm just going to look. No, it wasn't. But how about if we get up to here? We get pretty close. So this may be forming an A to B equals CD pattern to the upside, Greg. It's taken on a swing point that has volume of 900,000 shares. So far, this has done 500,000 shares. So, yeah. So what this should tell us, A to B equals CD or not, whether because of the retracement being shy of 0.382. If price closed above that swing point we just took a look at, the price target becomes its TD knockout breakdown resistance level, 128.60. The weekly time frame chart, which has a TD knockout bottom, is trading above profile resistance, and it's red oscillator and change line. Not as strong, nowhere near as strong as a green one, but still trading above it is a beautiful thing. So this is saying I want to rally further. And you look at the monthly time frame. Now, the monthly time frame, this might be like Nike. Here we are again. How do you interpret it? Because you've got an A to B equals CD pattern. Was it confirmed with volume? Well, it was a bullish hammer candle that formed in April of 2025 with 19 million shares, and it was passed last month with 42 million shares. So this is another Nike example. So you're going to have a confirmed monthly A to B equals CD pattern to the downside. That's going to get you about the $70 area out there. So the monthly says I want lower price. The daily is saying I want higher price, potentially. The weekly is saying I want higher price out there. But the weekly's had 5 consecutive weeks in a row to the upside. Let's take a look at this. So that's nice and bullish out there, 5 weeks to the upside. We have seen this go 7 weeks to the upside as well from a weekly standpoint. So not going to use any, since I see that, this can continue to move higher. I think this wants to move higher short term, longer term, it wants to move lower. And maybe this is going to be a nice rally, a nice counter trend move, or a nice move, if you will, up to that 128.60 level. Best I can do for you, Greg, on OC. You also want to take an OKTA out there. Okta, whatever it is. Let's go see what it's doing. It is trading out right now at $90.23. It is taking on the sell zone of its weekly profile. And so if it could close above that being $90.76. You're looking for a close above 90.76. That would be a nice bullish signal out there. In fact, what we can say is that since it's high, back in May 16th out there, we have not seen a close above the top of a weekly profile. So what does that tell you? That says come tomorrow, if we see a close above 90.76 out there, that's a bullish signal. If we look at the daily time frame, heck of a nice move out there. Negated a TD9 count top. Nothing really wrong with the daily time frame, just trading with inside its profile. That's between the range of 85.25 and 91.65 out there. And the monthly chart, you are trading with inside its profile as well. So it's really up to the weekly chart out there. If that weekly chart can clear 90.76, OKTA, Greg, should continue to rally. Dan would like to take a look at SLS, so let's pull those charts up on our screen out here. SLS, I'm going to take a swig of water, if you don't mind. And if you do mind, I'm still going to take a swig of water. So, did not mean to get that ice cube. It just kind of slipped right through. And I didn't want you to hear the crunch. But you may not have had a choice. So, SLS, Celis Life Sciences, Dan, looking muy bueno today. Why is that, Stevie? Because it's about to take out a TD9 count top after forming in just 1 day's time period. So here's your TD9 count top. This forms here on December the 16th. That was on Tuesday. Wednesday, don't take out that high, but right now we are trading above that high. What is that high? That's $2.31. We're at $2.36. You close above that, Dan, you're off to the races to the upside. Do I have a price projection? Yes, sort of. The price projection would really be, it looks like it's all-time high. I don't know if that's the case or not. Let me open up the weekly chart. No, it's not. It's going to go take on its swing point. That's a swing point from October 24th out there. That's got 37 million shares. So far this week, you're into it 21 million shares. It should still go at least test that high at $2.48 out there. If you can clear that, that would be a bullish outcome as well. So that's the weekly chart for SLS. And the monthly chart is just absolutely positively useless for us. So the daily looks good. If you can close above that TD9 count top, you should continue to see higher highs out there, Dan. We're going to go take a look at JSPR as well. Let's get its charts up, pulled up. JSPR, give me a second. That should be here. There we go. So as we take a look at Jesper, Therapeutics, it is got a what? A wave 7 bottom is what I see out here. on its daily time frame. That goes ahead and confirms on December 4th. We are now trading with inside its profile. That profile, Dan, says that if we can close above 186, we're at 190. If we close above 186, my preference, quite frankly, would be to close above the high from December 5th at 193. Don't have to, but if we close above 186, odds favor a move to 204, the top of that daily profile. Weekly time frame. Let's pull this back. Weekly time frame has a teeny 9-count bottom pattern. It has just led to a sideways move. That sideways move shows us that we've got strong support at $1.67, both the bottom and center of its daily profile. Resistance at 213. On a monthly time frame, what you'd love to see take place here is get a bullish reversal candle. Well, you might have it. You do. You have a key reversal bar, and if on a monthly time frame this closes just one tick to the upside, that means it needs to close at least 192. You will have three bottoms out here in Jesper. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Brent writes in, let's take a look at ticker symbol MARA, exploring it for a potential of a bottom. So this did form a TD9 count bottom back on the trading day of November 21st out there. Then it goes on to form a TD9 count top with inside its profile on December 9th. And now it's pulling back. It did close below the bottom of its daily profile yesterday, Brent. It did it with a volume of 49 million shares going into that TD9 count bottom that's got 56 million shares. But we're trading below the red oscillator and change line. We're trading below profile support. And if we remain below 1017, odds favor we at least go test that low being 971. And then you're looking for a test rejection with less than 56 million shares. The weekly time frame chart is trading back into a TD9 count bottom that formed on April 4th. That had 182 million shares. So far for the week, we are at 152, but this does an average of 40 million shares a day. Just adding that to tomorrow be 192 and another maybe 30 for today. So we are pushing that swing point with volume. That says you get down and you test that low. That's 981 out there. That would also then trigger potentially another TD9 count bottom for its weekly time frame. So the monthly isn't back at support. It's back at its buy zone for its monthly profile. But you got to let the daily and the weekly play out here, and maybe we get some information, by Monday out there. So I hope that helps you out. Duncan Steve wants to take a look at RGTI. Rigetti out here looking pretty poor on a daily time frame, trading below profile support. It's red oscillator change on into a hammer candle from back on November 21st. Volume there, 52 million shares. We got into it yesterday with 33 million shares. Today so far, 16 million shares. So we're about 45 million or so going at 52. As long as you stay inside that swing point, that means below 23.68, you may test a low, 21 even Steven. I'd say you especially test a low if you close below the bottom of its weekly profile, and that's at 23.21 tomorrow. And the monthly time frame, your trade may be targeting 21.42. Folks, that's all the time we've got left. Just blew right past us, but I'll be back with you on Fantastic Friday. But in the meantime, I want you to have a terrific Thursday. Thanks for joining us. We'll look forward to speaking with you again soon. Take care now.